The Central Bank of Nigeria has once again adjusted its monetary policy rate, this time by a modest 50 basis points. While this might seem like a small increment, business owners aver that its implications for the economy are far-reaching. As we dissect this decision, we will explore its potential impact on inflation, borrowing costs, and the overall business environment. Paul Alaje, Chief Economist at SPM Professionals, joins me for this. Hello, Paul. Thank you for joining me today.
Yeah, thank you so very much for having me. A beautiful morning to you.
Beautiful morning to you too. Well, 50 basis points doesn't seem like a big deal. What do you think?
Well, it's not just a 50 basis point. 50 basis point, of course, is a big deal in the market. And the arrangement or adjustment of asymmetric corridor, it's another conversation entirely, which means the rate at which banks will get funds from the Apex Bank will now change. They will have to pay higher to get funds from the bank, whether it's overnight lending or they want to get foreign exchange from the central bank, the rate at which they will get that in order to give to their customers. So there is no cheap money anymore. So here is the point. We cannot say it's not having impact. It definitely, we have some kind of impact. The goal of central bank is such that if Monetary Policy Committee increases or reviews rate, definitely that is expected to help tame down the influence of inflation on the economy.
Right, I like how you talked about the asymmetric corridor, because there are those who sort of do not necessarily understand, what it means, changing it from what it is to, plus 500, minus 100. I'd like you to speak more to the impact. I know you tried to explain that it's about the rate of lending between the Apex Bank and, the banks, but help us understand really the import of this, what it really means in clearer terms.
Well, what the bank has done by this adjustment is to say that from what the margin or the additional rates that will be on what the bank is giving to commercial bank is what is stated on their numbers. So instead of getting it at a relatively lower rate, they will now need to pay more. So when the rate goes higher, the bank will have to pay more in giving to the bank and giving to the Apex Bank. And when the Apex Bank is charging higher, there's no way banks will not keep a lower rate. So it's not just the MPR numbers that is the big deal. What the asymmetric corridor says is even something we need to pay close attention to. 500 is quite high compared to what they were doing before. And Apex Bank should have their reason for doing that. The reason they stated is perhaps because banks are getting the funds relatively cheaper, and that is why we see a lot of proliferation of FX demand, because it's really not very difficult to access the fund. If it is higher, they think, and those that speaks for them thinks that it may be relatively difficult for banks to come collect this money, which means the pressure on Naira will significantly reduce. Well, in economic theory, that could be correct. But when it comes to applied economics, the one that studies different economy based on the nature of who they are, then I can tell you that this may not entirely be the case.
Right. Well, some of the analysts we spoke to before now expected a 60% chance of a hold and a 40% chance of a hike. Now, for the hike, their considerations were the ASAP project, the distribution of trucks of rice, about 740 to the 36 states of the Federation at the FCT, the suspension of food import duty, and of course, the proposed new minimum wage. What do you make of this?
Well, I knew central bank will increase. In fact, I was expecting central bank increase to go to about 100 basis points because of the points you have ruled. I knew central bank will never maintain the same position. But I can also tell you that this decision is not the right decision that the country is right now. It is important to look at economics beyond the elementary or the surface understanding of it. Generally speaking, most schools of economics in Nigeria, we teach types of economics and teach how we can combat inflation based on type. So here we have cost push inflation and demand pull inflation. So if it is cost push, there will be general increase in price level of cost of commodity. That is ability to buy. People will have concerns around prices because it would increase. The second type is when people have so much money to buy, because perhaps salary has increased and so on and so forth. But in policy choice, the type is not sufficient to tell us what option will be used. The kinds are more important than the types. So, and this is what most schools of economics don't teach. When it comes to choosing the type, the kinds, I beg your pardon, we have two kinds when it comes to kinds of policies. I mean, two kinds of inflation. Other kind of inflation, we have monetary and non-monetary. Monetary is one that results the reason for that is distortion in the value of local currency. For instance, peso in Argentina, or naira in Nigeria, or Zimbabwe dollar. When you see that the value of your local currency has emaciated by up to 40 or 50% within 3 to 4 months, then you know that you have high level of monetary induced inflation. But if what is inducing your inflation is insecurity, weather condition may be flood or excessive heat or supply chain concerns, maybe there is disruption, then what you have is non-monetary induced inflation. Why have I elaborated this much in what is monetary, what is non-monetary? Here is the real problem. The real problem is policy choice. If you rely solely on policy of monetary to solve non-monetary inflation, you are going to suffer. There will be a lot of setback. In fact, it will stagnate the economy, it will crowd out investment, and it will crowd out employment. So let's ask, in the last 3 years, our growth rate has almost remained the same. It became predictable, either below 2% or above 3%. That is what it has been. Our population growth rate is not far from that. That's stagnating figure. That's what we have been. Because the real cause of inflation, as a result of kind, it is not monetary induced 100%. The monetary component in our inflation is highly less than 5%. I mean, it's less than 35%. Over 60% of our inflation is non-monetary. And don't trust what I'm saying just like that. Before you trust it, check the numbers. The National Bureau of Statistics is the agency reporting. And the agency reporting is telling us that food inflation is higher than headline inflation. It's also telling us that food inflation is over 40%. And when you look at food inflation, is it monetary? No. The problem is from supply. We have high level of shortage in supply side of food.
Let me come in here, Mr. Alaje.
How do we combat this non-monetary related?
Absolutely, I was actually coming there. Now we've seen the great. We've seen the fiscal authority, start sort of stepping up to the occasion and then rising up to the occasion rather, and then trying to address some of those things that you have mentioned. Do you think they are not doing enough, or you feel that maybe their policies or measures probably are not good enough?
No, there are some assaults. We are looking to import food. I really hope it doesn't go beyond 180 days. If it does, Naira will get devalued to 2,000 or more. You have seen recent increase in the valuation of Naira. Why? We now need to get hard currency to import food. You can imagine. So when the food comes, I hear that because there will be no import duty. Please, and for those that are watching this program or those that will watch in the future, find out how much a bag of rice, 50 kg, is sold for in dollar rates outside Nigeria. And multiply that by exchange rate and cost of logistics and see whether it is not penny wise, pound foolish. It does not take more than 4 months, maximum 6 months to grow paddy rice. If we spend 20 years to rehearse madness, when are we going to practice it? So my point here is we have land. The land there, they are arable. We have access to fertilizers. We have human beings, labor force, young people, old people that can work on the farm. Our challenge is coordination. Our challenge is purposefulness. And I believe that when the students are ready, the teacher will show up.
Oh, that's quite interesting. I wish you could elaborate on what you mean by when, when the students are ready, the teacher will show up.
It's a Chinese proverb. When we are ready for progress, we will certainly see it. When we are ready for miracle, we will work it out. Economic miracle don't just come by laying of hands. It comes by planning, orchestrating, and having structural plan and ensuring we see it through. That is how economic miracle have happened, from the Asian tigers miracle to the European miracle after the Second World War, to American miracle, to the current Chinese miracle, and perhaps what India is doing for themselves. It's as a result of structural readjustment, purposefulness. In fact, India was where we were in 1967 to around 1970. But check out India today. They now produce from the rest of the world because they've soon realized that they cannot live from sheep to mouth. What Nigeria is about doing is sheep to mouth, but I hope it ends within 180 days, like government had mentioned.
Some persons would argue that this is a short-term impact, just in the short term to ensure that people have food on the table and all of those. But then let's take a look at this now. The organized private sector has sort of declared that this particular hike would raise the cost of borrowing from banks, worsen hardship, and then increase the cost of production in Nigeria. However, we have seen certain policy decisions that are sort of geared towards making the business environment more comfortable. One of those is the new withholding tax regime. What more do you think the government can do or should do to make production rather less expensive for businesses, looking at this particular one that they have done now?
Well, I must commend government regarding the withholding tax policy. It's a policy in the right direction. Two, I must also say that we need to stop all increase in rates because it has implication on growth, it has implication on employment, it has implication on investment. Environment to be supportive. We need the environment to improve before we can say we have the kind of economic growth that we expect. Unfortunately, the environment seems not to be as favorable as we think it should be. And that is why you are seeing regulatory concerns, policy concerns, and so on and so forth. So what more can we say? What we would say here is that authorities have responsibility to ensure that as much as we want to combat inflation, which is very important, we should use the right strategy in doing that. If not, it will even make things worse than what we expect it to be. And for me, what more can government do? Agro-processing, I have said that, I've sounded like broken record. What I think we should be doing now is creating farm ops all around the states, all around the local government, with the support of federal government. States must definitely take responsibility in this too. Re-establish, rejig, revitalize, or rekindle the energy for industrialization, which is becoming, which of course, when you talk about industry in Nigeria, people wonder if the still exists. We need to go back to our industrial zones and provide all necessary amenities for industries so that we can have sustainable growth, reduce import, and also promote exports. Of course, one thing that is most important is all action of government to promote productivity. If productivity is low and import is high, definitely currency will emerge. And I can tell you, if you continue to import food, I have said that in doing this for 3 months, my recommendation to government remains 3 months. We have seen government push it to 6 months. But if we extend it beyond that, you are going to see that it will be worse. Why did I say so? It's important we stress this. It's important we stress this. When we import food, it will have impact on exchange rates. Recall that food inflation is high. So rather than food inflation getting low, because it now affects exchange rates, it will change inflation from non-monetary to monetary. So central bank will come, or monetary policy committee, to increase rate. That will reduce growth. So currency is getting emaciated, growth is getting stunted. We have problem on all sides that way. That is why the real solution, so that we don't take out jobs, is let us get to our farms, let us connect it to our industry, connect industry and farm to the market, then we'll be good to go. Or some of those are medium term, some are short term, some are long term. It is what it is. This is what we can do to make our country become better.
Right, let's close on this particular one. I mean, it's a whole lot I'm sort of trying to string together here. We have exchange rate pass-through. the impact on inflation, which is something we cannot ignore, although the increased yield on the fixed income market seemed to attract FPIs, but we also know that this is hot money, and even that particular window doesn't seem to be as liquid, because even the July bond auction, we saw that it was undersubscribed, and now it would seem the magic wand being wielded by the CBN is to inject liquidity in the system through the BDCs. I'm looking at all of this. What is your thoughts? What are we actually doing?
Well, to my mind, we are doing everything possible to predict the rate at which Naira to the dollar will be in terms of exchange rate. But are we really doing what is sustainable? I doubt. We have floated the Naira, and it will have consequences. The consequences is we will be under pressure because our productivity does not support it. Our export capacity does not support it. Those two major parameters will influence what we will do or what we are going to achieve. And so that's why central bank perhaps has been on high jump to ensure that, it doesn't go beyond psychological value and all of those things. So the goal is to achieve stability. Will stability come at 1,005? Or will it come at 1,007? Or will it come at 1,000 Naira? We saw relative reduction to 1,900. But the moment production season starts, this is the time we are getting to production season where people want to have their raw material for end of the year production, last quarter production. We have also added food import to it. So you make policy on one side, but the federal government is thinking of what to do at the other. And that is why some of us will say that it's important for policymakers to look through their policies for convergence. For me, at best, central bank has some goals he wants to achieve, which is currency stability and price stability. But this cannot be achievable without considering other goals in the macroeconomic framework, which includes GDP growth, which should be positive, which will be strong, which should be sustainable, and which must be sustained, with income distribution, as well as what do we call it now? Jobs, which is employment. That's improved employment. So, but when you look at the policy, one or the other is suffering. And I know that some economists will say that, one must suffer. That is not correct. There are countries that have low inflation, low unemployment, high, what do we call it now? GDP growth rate, low inflation. They are all possible. It depends on the policy we make, our structural plan, and our energy to implement the same.
Thank you so much, Paul Alaje. That's Chief Economist at SPM Professionals. Thank you so much for your time and your thoughts on the show today.
Thank you so much for having me.